Good morning. Welcome to another CAMSPay Payments Insider webinar. Uh, very happy 2022 to all the audience who've joined the webinar today. Uh, Today's webinar, we have got two illustrious speakers joining us from the mutual fund industry. I'm very pleased to introduce both of them to you. The first speaker is Ganesh Ram. Ganesh Ram is the Managing Director and CEO of MF Utilities. MF Utilities is a jointly owned entity by all the AMCs under the aegis of AMFI. Ganesh brings more than 20 years of experience in the financial services, capital markets, and in process transformation and in investment banking. He joined the MFU Utilities or MF Utilities India from BSE Limited, that's Bombay Stock Exchange, where he was working as the MF business head. Prior to BSE, he had worked with K Fintech as the head of mutual fund operations and digital products. He has also had stints with Bank of America, Merrill Lynch, and GE Capital across various roles. Ganesh holds a bachelor's in finance, a postgraduate diploma in business administration, and is a certified Six Sigma black belt. Ganesh, thank you so much for joining today's CAMSPay Payments Insider. Let me, before
Thank you, Ravi.
introducing
Pleasure is
our
mine.
second speaker, I want to quickly start with a question to you. So, if I look at your previous three roles, in some sense, you have worked in the back office with the RTA. You worked in the middle office in some sense because BSC platform was catering to a number of distributors, and now with MF Utilities, you're right there in the front, working with investors. How has this journey been, and what have been some of the key nuggets of experience that you have seen in this journey?
No, I think first of all, thank you. Best wishes for CAMSPay for getting me. So I know Mr. Jayant Pai also. I'm sure he is my shareholder. So basically, I'm so thanks for this. So I think the experience is utmost same. The only difference is I think I get to work with the industry and I'm feel much closer now as compared to previous. And exchange obviously is a different setup. It's a MII per se. But with MFU, what happens is so that we tend to spend more time and debate and deliberate to do better things for the MF industry. I'm not saying we're not done with BSE, but it's a completely different setup. But both role, at most same. But the other important thing in MFU is also we also have the direct mode where there are investors can directly walk in and do that transaction also. Uh, so it's a kind of much more responsible role, I would say. And the other thing which we are trying to do is, which we are even trying to do with CAMSPay, is to how to streamline and standardize process. Okay, so now being owned by the industry participants, it was by all the AMCs as the shareholders. Like what we have done, non-financial transactions, we have done the CAN, which are all some of the efficient way to drive the business. Idea is to kind of work with the AMCs and see how we can standardize the process. So eventually the benefits goes back to the advisors, distributors, or investors. So that's a key role. I think the next 2-3 years, I would see MFU kind of taking a pivot role in not only being a digital platform driving, as a plain vanilla platform, also to see how we can able to add value and then even standardize and simplify the process. So that's where I think all the key stakeholders, be it MFU or AMCs or RTAs, depository participants, people like CAMSPay as aggregator. So we are in a sweet spot to see how we can improve. So that's where I know the challenge is more, but it's quite exciting.
Fantastic. Oh, that's a great way of starting. Thank you so much for your time, Ganesh, and welcome to the webinar. Let me introduce our second speaker. Our second speaker is Jayant Pai. Jayant has been associated with PPFAs for more than 15 years, and he currently heads the products and marketing functions at PPFAs Mutual Fund. Prior to this, he has served in different verticals, including stockbroking, retail and institutional dealings, institutional equity sales, and investment banking since 1993. Besides being an alumnus of IIM Ahmedabad, he is also a certified financial planner and holds a diploma in securities law from Government Law College, Mumbai. Jayant has also authored several articles on mutual funds, financial planning, and allied topics in publications like ET, Business Standard, etc. He's also seen on shows on TV channels like CNBC, ET Now, Z Business, etc. Uh, Jayant, thank you so much for your time and welcome to the CAMSPay Payments Insider webinar, the January 2022 edition. Again,
Thank
you
you, Ravi.
have probably had a long stint, and right from the time the mutual fund industry has birthed itself, you have seen it grow. So if you were to sort of encapsulate your last 2 decades of experience as a summary, what would that be?
Yeah, thank you, Ravi, for inviting me. And hi, Ganesh. So actually, when I saw the list of speakers, I was delighted to see that Ganesh was there. So, and Ganesh has already acknowledged me, and so in that way, jumped the gun. But I too am very happy to see you, Ganesh, and all the best for your new role.
Thanks a
Yeah,
lot.
so
Thanks so much. Pleasure is mine.
yeah, so rather serendipitously, the mutual funds have followed me ever since I began my career. So so I began my career in '93 with Utpal Sheth. So his father was a broker, and I began with him. And my first assignment was making a detailed report on the mutual fund industry at that time, so which was dominated by UTI, and with Canara Bank and Bank of India and a few other PSUs, just making up the rest of the pack. So this was even before Franklin came into the country, and from then on till now, if I see, I am just astounded. So in those days, as people may be aware, that there was no concept of NAV at all for UTI. You just pay the amount and you get some number of units, and you are happy, and there is a sort of a quasi guarantee. So everyone was happy, and then we saw this master gain in '92 during Harshad Mehta's time, which attracted humongous subscription. Then we of course saw Morgan Stanley in '94, where people really didn't know what a mutual fund was. They thought it's an IPO with limited number of units being allotted, and there was a mad rush. From there, we have come to a stage today where I would happily. I mean, sometimes I am a bit flustered also because the extent of regulation is heavy, but I am very happy for the investor because uh, it is probably the safest form of investing in financial instruments today. I mean, which offers you some upside also. I'm not saying that investing in an SBI safe FD is less safe than a mutual fund. That of course is safer. But if you, on balance, if you just compare all the pros and cons, mutual funds today offer investors a more than fair deal. So I am very happy to see how the industry has come along, and also delighted to be along this pathway. So one more thing is that during my other journey, so once I got into dealing and sales, mutual funds were my clients. So all the like well-known fund managers of those days, they I have spoken to all of them, and I got to see how they know their thought process and how they worked. So mutual funds somehow have always followed me wherever I have gone.
So the mutual funds and Giant Pile are mutual followers of one another. That's interesting. Okay, so to the audience, welcome to the CAMSPay Payments Insider Jan 22 session. If you have got any questions, please use the Q&A section of the chat window and post your questions. We have got a few questions already that have come up, and we'll use that to start the conversation with Jayant and Ganesh. But as your questions come in, we'll also trickle those in if we have not covered those already. This is a 1 hour session sponsored by CAMSPay. CAMSPay is a payments aggregator, and CAMSPay's exclusive focus is on the BFSI industry, predominantly in enabling SIP payments for mutual funds, in enabling premium payments for insurance companies, and EMI payments for NBFCs. This is part of the thought leadership session of CAMSPay, and we are delighted to have all of you here and look forward to your questions. So let me kickstart this, Ganesh and Jayant. The shift in terms of the B20 and the T20 that has taken place over the last few years, from being from mutual funds being exclusively focused on the T20 a few years back to, the shift now to make it more en masse and to take it to the hinterlands of India. How do you see the digital payments and the change in payments itself enabling that and making an impact to this shift from the T20 to B20? Ganesh, let me ask this question to you first and then the same question to Jayant. Jayant, I think, sorry, Ganesh, you're on mute.
Sorry. I think, it's a good question. It's a great question, by the way. If you actually look at the AMFI data today, if I'm correct, I think approximately around 18% of the AEM comes from the B30 locations. Okay, so which leaves around 82% comes from the T15. This percentage, if I'm right, was around 12 to 14% pre-COVID times. Okay, so there is only probably 4 to 5% jump um, in the number of AEM which has come from B30. But if you look at the folio growth is significant in the B30 location. So it's quite a different data. But having said that, I think payment makes a huge differentiation in the B30 location. The reason I'm saying this is one is we still see people using the check, which is a traditional way of doing mutual fund in those locations, and we need a much faster clearing. Okay, so in terms of check, and we know, bank to bank there is a differentiation between the check clearing, and check clearing always becomes a pain point, and particularly after that SEBI regulation of same day NAV, it's become very critical. But having said that, some of those new payment modes like that payment wallet, okay, so UPI and the UPA Recur Pay, all these things will definitely drive. It might not have a great impact today, but from a B30 location point of view, uh, payment modes, leaving NEFT, RTGS, and direct credit, uh, UPI, UPA Recur Pay, and this payment wallet can able to be a game changer, provided we give a seamless payment experience to the investors. The reason I'm saying seamless is we do have certain set of bank which provide all this on a seamless way, and certain set of bank who doesn't give the details. Okay, even let's talk about even the debit card mandate authentication. So only around, I think 17, 18 banks which gives you the underlying bank account from where the or the debit card which has been used. Some banks don't give, so we are not able to enable that clearly. So I think there is a huge potential in B30, and at least in MFU, our B30 AEM is slightly more than industries. We are close to around 25 to 30%. Because of the factors, we do have a financial transaction, we do have non-financial transaction, and MFU is the only platform where you can use one single physical form to invest across all the AMCs. So these kind of additional and there is a direct mode investors also compared to exchange platforms. So these things really helps us to reach out and get more investors and probably distributors in B30 locations. From a payment point of view, if that can be streamlined, that will be of great help, and that will really help the industry to get more investors. That would be my view.
Interesting. Jayant, how do you see this shift and specifically the shift and the sort of resurgence of payments and digital payments in a big way? How do you see this intersection playing out, for PPFAs?
Yeah, for us, I mean, we have being a fairly recent entrant. I won't say we are very new now after 8 9 years, but being I mean more recent than many others, and also given the lack of distribution network, at least initially, we did rely a lot on digital payments as a mode of transacting. Uh, Now, regarding so I saw some numbers for my fund from around from inception, from May 2013 till today, and the numbers are really astounding. So thanks, Ravi, because you invited me. I did some sort of study on my own fund, and so the number, for example, was 33% of volume was done through digital channels in 2013-14 in our first year, and that has grown to 99.10 in this year so far. In the
Wow.
Yeah, it's really amazing. So 99% of the transactions, and in AUM wise, the first year was only 1.28%. So although 33% of transactions, but only 1.28% of AUM, that has grown to 87% so far in this year. So so we have actually stood on the shoulders of digital and grown. That's what I feel. And that's also because of two three reasons. So one is so CAMS has helped us a lot initially. So when we lacked the resources to actually build our own app and other channels, it was CAMS who actually helped us for the first 3 years. Later on, we built our own app, but the biggest delta has occurred due to the exchanges. So BSE Star has been the biggest contributor to the to this jump. So today it contributes 66% of online. So if total online is 99, 66% of that is through the exchanges. 20%, 28% is through our channel, that is PPFA self invest, and other balance is through others. So MFU is around 4%, and that figure is stable for the last 5 years. So I think people are, I don't know, I mean, MFU offers very good features, but I think people are finding maybe exchanges more convenient or what, I'm not sure. But MFU has actually done a good job in sort of introducing our fund to many new retail as well as distributors. So that's a good thing. And so this in terms of SIPs also, so this figure what I said was lump sum. In SIPs also it's a similar figure. So around 20% of it comes to the app, 68% through the exchanges, and MFU also is around MFU is around 5.5% I think over there. So that's how the numbers go. So we have nothing to complain. So now regarding this B20, so what Ganesh was saying is perfect. So the thing is that we are only one cog in the wheel. So it is the AMC along with the payment gateway are keen on getting things done quickly, but we are only as good as the weakest link in the chain, which is the bank. And up to recently, banks did not really have any incentive to tweak any of their processes to suit us because we were not that vital in the entire scene. I mean, recently, I mean, say till up to 2017 or so. Uh, so then, I mean, I remember talking to BillDesk for, I mean, many times on this, where they have told us that they kept on talking to the banks, trying to convince them to do this and that, and it was not happening. And today, slowly, some things are improving. So we are only as good as the banks. So if the banks give us the proper timely MIS and timely or new ways to transact, then that is going to help us. Second is regulation also sometimes keeps us back. So, for instance, what Ganesh mentioned about debit card validation. So, this problem is not faced by any other industry in my knowledge. So, the insurance industry, for instance, people may not really ask you, whereas from which account have you paid. But here, because SEBI is very particular about this third-party transaction validation, we, after a lot of internal debate, have actually suspended debit card payments as an option. So it led to some outcry from clients, but we were finding it too difficult to convince the auditors that I mean that things are in order. So that is one drawback for us. One more thing is in B20, I think see people have got used to digital, but digital which is not really compatible with funds. So for instance, QR code, that is not possible still in a mutual fund. You can't go to a mutual fund office and pay by QR code as far as I am aware. UPI has only recently come. So UPI version 2 is a very useful thing, but it is yet to catch on in earnest. So people are still relying on net banking, NEFT or RTGS, IMPS, and to some extent UPI now. So I think for B22, so one is of course market movements and market uh, action has had its own pull in attracting new investors. But apart from that, the if you are able to increase the number of payment options to things that people in B20 are more comfortable with, that may also help.
That's interesting. In fact, let me just add in two other dimensions to this discussion. One is the pandemic itself. How much has the pandemic brought about a change in terms of your outreach to investors as well as investors, outreach to you through digital means? Because for many months in the last since 2020 March, there have been lockdowns, there has been physical curtailment of movement. So in some sense, for reasons outside of the industry, outside of the thing, people are being pushed to adopt digital means in a big way. That's one part. Second, I think both of you touched upon this in some way or the other. There's also been a lot many more regulations that have come by from SEBI, from RBI, and NPCI itself has also innovated in terms of coming out with the UPI AutoPay that you were referring to. So quite a lot of things happening out here from a regulatory activism standpoint, from pandemic, which is impacting everybody on the planet standpoint. So how have these two very strong forces impacted your business in the last 2 years, specifically from a payment enablement and a customer experience standpoint?
Who is this question addressed to?
Jayant, since you are unmuted right now, it is addressed to you.
Okay. Yeah, so extending what I said earlier, we have been blessed because of this fulfillment mechanism over the last 2 years. Because, I mean, I would say due to a lot of circumstances and including the, the Almighty's grace, we have suddenly become a buzzword since April 2020. And people who did not even know what the full form of our fund was today are eager to buy our units at any price. So, fund performance certainly was one sort of contributor to that, but the ease with which people can transact, that also helped. I'll just digress a bit, and I'll go back to say 2001. So in 2001 I started my first SIP, and this was in Franklin Blue Chip. So I mean, I didn't know this concept of SIP much before that, but somehow after the .com crash, suddenly many finance magazines started popularizing this concept. So I started in 2001, and that time I had to give 12 checks. I had to write 12 checks and submit it to. I think the agent was Blue Chip that time. So there were two, three big agents. Blue Chip was one of them. So I had given it to them. So that's how my first SIP began. But after that 1 year, I felt very lazy to write another set of 12 checks. So that's how the chain broke. And I mean, I just wonder if I just continue that, what may have happened. So the thing is that we are very fortunate today that apart from knowledge about our fund, people are finding ways to easily fulfill their desire to invest also. And this would not have happened without digital channels. So pandemic has helped us a lot, and also given the fact that the entire industry can work from home without much disruption, that has also helped us. What was the second one on regulation? Is it?
That is right.
So yeah, so regulation is of course common to everyone, and it is very much desirable in many areas because see, in finance you are basically just dealing in thin air. So we are dealing only in trust. So there is, and also there is delayed gratification for the investor. So there is, and there is no sort of a free look period in mutual funds at least. So when you combine all this, it is very important that one, we on our own educate investors all the time, either through AMFI or as individual AMCs. But sometimes that is not enough. So SEBI also has stepped in many times. And given the adjacencies, we are also beholden to a lot of uh, changes which say RBI or NPCI keeps bringing along. Again, we are thankful to our payment gateway providers because without that, no mutual fund could have grown. Because the ease with which we can plug into, say, 50 banks and cater to the needs of diverse set of investors is amazing. So this kind of uh, you know it's a luxury actually, something which we take for granted. But I was just wondering the other day that what if payment gateway suddenly decided that they won't do mutual funds? So then what do we do? So it's a confluence of many positive factors which has helped our growth and helped many funds, say, who are in the bottom half of the industry, because the top 10, 15 had a good distribution network and all, which of course they had to tweak during the pandemic, but they had some cushion. But for the bottom, it's helped more than proportionately. So saying the pandemic actually was helpful to us.
So in some sense, it's been a leveler of sorts between the the top half and the bottom half. That's interesting.
Yeah.
Ganesh, you see, I mean, MFU sees itself as a transaction systems aggregator, as your prime objective, prime purpose. So, and you also have very interesting product names, transactees, payees, corpies, and so on and so forth. So, how do you see specifically some of these things, the ease with which investors have been able to transact over the last, say, since 2020? It's now a little over 2 years. How do you see this having changed, since the onset of the pandemic? And also, from a regulation standpoint, your views, please.
No, I actually read somewhere, which is quite interesting, that why mutual fund is regulated so much. Okay, I just want to give one meme which explains that. A 50% to 60% downfall in crypto is underrated. A 0.75 percentage of NAV fall is overrated. Okay, so that really gives you the significance what mutual fund is. At times I feel, people say, no, why you are regulated more, but at times I feel it's required, and over the period of time, it's be it RBI or NPCI or even AMFI or SEBI. I think these regulations are good. Okay, so I just thought, no, I'll put that in perspective. But interestingly, if you look at the pre-pandemic period, see in MFU, what happens is, as Jayant told, we don't have a greater volume of transactions, okay, by number of transactions. So, for example, one of the exchange, say, does around 36,000 crores turnover in a month, okay, with probably more than a crore of transaction. But in MFU, we do around 10 to 12 lakhs transaction, but our turnover is close to 3 lakh crore. Okay, so the volume is quite high. Okay, so in that perspective, but having said that, pre-COVID, I think our digital was around 92%, 93%, but which has kind of moved to around 98.5% now. Okay, but we still see people are remote areas, they want to cut the check and all those stuff. But interestingly, our transaction is around close to 100%. So online transaction is around 100%, but the payment is around 98%. So there are people who do online transaction but give a check. Okay, so that continues to happen. I don't know what is that mindset, but the pay easy, which is a mandate, basically e-mandate or physical mandate, is around approximately 50% of our total payments module.
Oh,
And then net banking, RTGS put together, we are at around 20-25%. Okay. UPI BBPS is just 1%. Okay, I don't know why there is nothing. We are not enabled the UPI AutoPay. Okay, so we're probably waiting for some time to see. And check is around 10%. That continues to. That's the reason I always talk about check if they can able to do. So 50% of that comes to mandate. I think that's going to continue. Probably it will increase more because mandate is much more easier to fill up, and obviously with a platform like exchanges and MFU, where you can have one mandate cutting across all the AMCs, it becomes much more easier for the investors or distributors to use it. But some of those regulation for UPI AutoPay, I think it's 5,000 now, if I'm right. So that can be increased, or UPI limit can be increased. I think that can significantly go up. But we just seen so around transaction is at most 100% of online, but payment continues to be around 98%.
that's interesting. Uh, so let me sort of, I mean, one of the
And just to add, sorry Ravi, I think I should thank Jayant. Why? because no, he congratulated BSc, and that time I was in BSc. I remember I met Neil and I met Mahesh Sarode and I met him, and we pushed a big time digital. Jain bhai, I will take most of the credit what you told, because no, I was that time in BSc, and anyway it's also a baby. So
Yes, yes, I fully give you the credit, and I'm very happy. In fact, if you are still there, who knows what we may have achieved? Full 100% maybe.
but we'll definitely increase in MFU also. So don't
Yeah,
worry
but
about it.
MFU is giving you an opportunity perhaps to raise the stakes here.
Yeah, definitely.
Yeah,
So,
Sorry,
thank
so
you.
Ravi.
Ganesh, I'll just take from a point that you were talking about, which is seamless experience. And you said one of the key things that you really want to focus in MFU is about streamlining and standardizing the overall process and the transactions itself. Uh, so, in today's digital world, and as you are also seeing a huge uptick in terms of the digital transactions, the customer experience actually is key and critical for driving the fate of both the business and the organization itself. So, and at least in a majority of the mutual fund transactions, the CX or the customer experience has a direct overlap with the PX or the payments experience. Now, PX is not directly in your control because it's sort of you hand over the PX to a payment aggregator, a payment gateway, who in turn hands it over to a bank website and so on and so forth. So there are multiple hops out there, and the payment experience, in some sense, defines, if not fully, a good part of the customer experience when they are transacting with you digitally. So how do you see this interplay, and how what do you do to ensure that the MFU customer experience does not get negatively affected due to any kind of a volatility or any kind of disruptions in the payment experience?
Sure. That's a great question. So let me kind of a little detail. If you actually break up the mutual fund customer experience life cycle, okay. So I will probably define it into five.
Hmm.
One is the onboarding. Okay. Second is a transaction. Third is the payment. Fourth is the transaction confirmation, and fifth is the client servicing. If you actually look at this five over the period of time, onboarding and payment, onboarding client and payments has actually gone through a big evolution from a digital side point of view. It's much more easier with a lot of fintechs coming in, easy to onboard. You just put your PAN number, mobile number, email ID, they get your entire data, and payments is also enabled. Okay. So there is a lot of driver's seat taken by onboarding and digitization. Unfortunately, even transaction that extent it has, but what really has not done is a confirmation. So today, if you look at distributory fraternity, is the last person to get a confirmation of the client. Actually,
Hmm.
they should be the first one. Okay,
Hmm.
investor
Hmm.
gets and AMC gets, and then they get. And client servicing. When I say client servicing, SOE is not there. Then your NAV is not there. NAV, same day NAV is not there. I have not got the email. So a lot of issues from a client servicing. Payment I have initiated or debited from my account. So the query handling, basically. So that's where we still need to kind of improve that. The reason I'm saying this, those all has an impact on your payment experience also. I would have got onboarded quickly. I would have done the payment. I would have done the transaction. I would have done the payment. Payment also got debited from you from my bank account, but I still not got the confirmation. And I kept writing to the exchanges or MFU platforms or AMC, not got a reply. Okay, so these all drives the payment experience
Hmm.
basically.
Hmm.
Even though the payment was seamless, but still customer doesn't bother, right? So he says, "Boss, till I get a reply and NAV." So, but the other thing also which we need to look at, we always tend to look at payment means the subscription.
Hmm.
But one of the biggest pain point, being an investor myself for last 15 years, the refund and redemption also at least no seamless. Refund is another big pain area. So most of the investors who does, so there is a failed transaction or there is some issue, the refund doesn't get. I'm not here to kind of blame anyone, but I think including RTAs, including payment aggregators and platforms, somewhere we need to streamline this refund process to some extent. Between RTAs, the refund, the rejection or refund code is also not same. Okay, so there's no standardization basically. So what I'm trying to say is, and particularly after that first February 2021 same day NAV regulation which has come in, it becomes so critical now. And we see 50% of our queries or client services is regarding payment. When I say payment, it's not only the subscription, it also the refund, it also on the redemption. So what I would say is, overall customer experience is fantastic. Okay, so we have improved a lot, but the payment experience has a huge impact across all the experience. Okay, I would have probably given a best onboarding, quicker onboarding, great ease of transaction. Payment is also done, but for some reason transaction has failed, but the refund took longer time to come. As we are managing this fund, I think we are also managing the emotions of the investors. That is very important. And I have seen a lot of investors who first time come in. Uh, Transaction delay is also okay. Onboarding delay is okay. But anything happens with payment, they feel MF is not a safe place. Whereas MF is the most safest place. Okay. So in compared to any other asset class. So that's where I think payment experience, we call PX, has a huge impact on the entire life cycle. And that's where I always, tell my team from a payment point of view, be it's going to be a subscription, redemption or rejection, we need to be really top on it because we never know what kind of situation the investor, he or she is into. They might be in need of money, or that's the first experience, but the first experience is going to be bitter. You lost it. So that's where I think payment experience is pretty huge compared to in the entire life cycle.
Oh, I completely agree. And that's one of the reasons why we also do some of these webinars to make sure that there is a better awareness of the things that could go wrong sometimes unintentionally. Uh, Jayant, I wanted to probably ask you the same question, but with a slight twist. When I look at PPFAs has always, right from inception, been different, right? And not wanting to please everyone, and so on and so forth. In fact, you are probably the only mutual fund who calls that you believe in the law of the farm, right? Where like Kabir Das, one of the dohas of Kabir Das says, "Dheere dheere re mana, dheere sab kuch hoy. Mali sinche saugada rutu aaye pal hoy." I mean, everything takes its own time. Don't try to overspeed it. Don't try to accelerate things. It can be counterproductive. That's something that you hold very core to your belief at PPFAS, right? So, how do you see the intersection with payments and this law of the farm play out?
No, Kiran, here we don't want the law of the farm. We want things to be faster than what they are. See, thing is that there are some areas where we can differentiate based on our philosophy, but there are other areas in transactions where we cannot be lower than the industry standard.
Absolutely.
So people, so like what I mentioned earlier, the knowledge about the fund increased because of either performance or some people like the thought process. But if somebody comes and then, like what Ganesh says, that they invest and at the last stage the money is debited and they don't get a purchase confirmation, uh, the whole experience is suboptimal. And uh, this and when often the transaction has gone through successfully, but the investor is not aware of it. And ultimately, like since we are dealing in thin air and trust, end to end success and communication both are important. So today there are several funds which uh, voluntarily call the investor, telling them that this and this has happened, and would they like to try again? So, or to confirm that it has happened. So in that case, it is okay. But yeah, we would prefer to reduce that to as little as possible. So, so like the weightage I feel is around maybe 80% towards payment experience, because other customer experience can be outsourced from providers or vendors whom you have more control over, say the design of the app or the what messages should pop up at what time. But once it goes out of our system into the payment gateway, and the payment gateway has to deal with the bank, So that's where a lot of the delay occurs. So all steps to reduce that will be very helpful.
That's interesting. One of the things, at least in the financial world, is the emergence of fintechs. Right, globally, in the last probably 5 years, there's been a huge wave of fintechs, and India has not been very far in terms of following that global curve. And if you look at the fintech world, the fintech segment, uh, almost 60% of fintechs in some way are essentially in the payments segment, right? So there is a lot of things that are coming out. The number of people who are coming out with more technological ways of addressing the payments experience, payments innovation, and so on and so forth. You may have seen, I think, just yesterday or day before, NPCI has also talked about coming out with an offline payment mechanism, so that people who don't have any connectivity can also, do up to a particular amount, and with certain constraints they can still go and do payments. The point I'm making is that payments is one of those areas which have got this paradoxical needs, right? On one side, all of us like to innovate a lot more, do a lot many more things to make it faster, more convenient, and so on and so forth. Yet, on the other side, the need to create something which is highly secure, very reliable, scales up, very quickly, and is able to scale up and scale down in literally in a jiffy. That is also very important. So the reputation and the ability to ensure that transactions are conveyed securely from the point of origin to the point of destination. So these two very different tugs, if I can call, one side to work with people who are reputed, who can scale up, and on the other side, people who can very quickly come out with new things. How do you see this sort of paradoxical needs for payments play out, and how have you, at MFU, Ganesh, looked at creating the right balance between these two?
Okay, so I think it's a time. It's actually the era of Shark Tank. Okay, so I think every other person I talk, they all talk about, are you seeing Shark Tank? Actually, I have just seen few episodes, but everyone is watching Shark Tank today. Okay, so the reason I'm saying this, that actually shows the kind of impact this so-called fintech is having. Okay,
Right.
startups. I actually met one of the AMC's CEO. I think his daughter has quit job, and she's going to start a startup. So I just casually talking, you were saying, Ganesh, she wants to do a startup now, leaving a good job. I said, so she wants to get into Shark Tank and all. So I think what you're trying to say is the fintech is a buzzword today, and everyone is talking about it. Okay, I don't think we can. A lot of people, being intermediary or established players or other players, kept talking about the impact of this fintech, and there was slight insecurity saying whether this fintech is going to kind of take away the cream. My personal view or professional view is no. I don't think we should worry so much. Okay, as I told you, end of the day, we are managing funds, and we are the most MF per se is the most regulated product. I think the balance will always help. Okay, so end of the day, for an AMC or for me, for example, Ravi, what we do is we have uh, 3 or 4 different payment aggregators, including CAMSPay, as our payment vendors. Okay, to be very precise. So for UPI we have certain vendor. For mandate we have certain vendor. Even within the mandate we have 2 people. Obviously there is a risk. Obviously the button is with us where we can change. But what I'm trying to say is these are combination of people who are good in fintech and also people who have reputation. People like CAMSPay. We actually onboarded CAMSPay only because your success rate and your service is very high. Okay. So let's talk about an investor or distributor. He doesn't bother it's going to be a vendor A or vendor B or CAMSPay or anyone. I'm just not taking the name. For him, end of the day, if you want to make the payment, be it investor or distributor, whether the transaction has gone through, whether the payment has gone through. Okay. It's the AMCs and the platforms who need to work closely with the payment aggregators like you to ensure that happens. So even there is a buzz on fintech, Shark Tank, and all these things. Those are all will keep happening. It'll die one day. End of the day, services is going to be the primary key. So for me, if you ask me, I think like what we have a balance. I think we should have a balance. And over the period of time, I'm telling you, service is going to be the key differentiator and sustainable component. Okay, over the period of time today, everyone has, whoever thought in India at least 3 years before. In fact, I'll give you one incident. We went to Durgapur, okay, which is a
Mhm.
very remote place in
West Bengal.
West Bengal, and we went to a place called Davangere in Karnataka. I was surprised to see Davangere is a smart city. Okay. And the roads was much better than a metropolitan city. The internet usage of people in Durgapur is very high. Okay. You see smartphone everywhere. You see connectivity everywhere. So digital anyway will grow beyond what of time. So players like established players also will start getting into a digital mode, and they will also improve their so-called fintech capabilities. But end of the day, it's going to be the service. But I would definitely rate the established players to have a edge over the fintech, because they know exactly what happens, and it's not only a individual standalone responsibility, right? You need to work with RBI, you need to work with NPCA, you need to work with other key players like AMCs and RTAs. So that's where it's going to be a differentiator. So I would say it's a balance, but somewhere I would say established players like you have a slight edge, because anyway you can adopt technology more. But what really differentiates is what value you can bring, what is the success rate, and what is the service you want to offer.
Very well put. This more than the scale, the service and success rate, and being able to really serve the ecosystem is of a higher order requirement. That's a very interesting perspective. Jayant, would you have anything to add to what Ganesh talked about in terms of this sort of, I wouldn't say clash, but very different requirements of fintechs versus established players as far as payments is concerned? Okay, we'll come back. Probably Jayant has taken a break. We'll come back. Ganesh, incidentally, while you're talking about Davangere, so Davangere is claim to fame before it became a smart city was you find some of the most meltiest dosas being made out of Davangere. So that's a far more bigger uh, point of fame for Davangere than it being a
No, I
smart.
really had that dosa, but the payment I made through UPI.
That's fantastic. This we were earlier when we were talking, Ganesh. You talked about SIPs as well. So again, are you seeing any different change when it comes to SIPs and digital payments as against lump sum payments and digital payments?
Yeah, obviously SAP holds a edge over that.
Hmm.
So let us look at the industry statistics. I think we have crossed around 11,000 11,000 crores of SAP registration, which I don't think I ever thought about 2 years before. Okay, it's fantastic. And around 20 percentage plus of the AEM comes from SIP. Okay, so even our SIP has grown exponentially. A slight worry point of view is, people quit debt,
Hmm.
and they start pushing SIPs into equity, okay, which is more riskier. Somewhere, debt doesn't have it actually a balanced portfolio to have a debt, but somewhere people don't have that trust in debt, which is more less risky compared to equity. But the good news is industry is getting volumes. I think we are getting a lot of SIPs. The numbers are great. SIP is going to grow big time. And even I was reading some article which says around 35% of the SIP registrations or the new investors which is coming to MF industry, or the millennials, which is the age range between 24 to 35, which is fantastic, right? So it's good. People are, even when I talk to people also, people doesn't even know what is SIP. Okay, they youngsters, they don't know what is SIP. They say, sir, मेरे को SIP करना है. So my counterpart has done, my colleague has done, I also done SIP, because it's much more easier. There is an app and the payment is there. You can use UPI, so it becomes much more easier. SIP is going to be a huge win, but I think the mandate will be a major contributor to the from a payment side for SIP. Okay, the UPI AutoPay. Uh, I don't know. I don't have the numbers, but UPI per se, even in the industry, has grown, but not to the significant way, I would say. And UPI AutoPay, I have no idea because we have not enabled it. Uh, so the BPPS, the wallet, is also something we are looking at. I don't know how it's going to be useful. It's good to have these things, but SIP growth is significant, exponential, and as it grows, the bigger share is of the eNACH or NACH, as you say. I think it will take time for UPI to catch up that. But UPI is good for your lump sum payment, quickly done, and all those stuff. So if the UPI AutoPay can be increased or marketed well, that will be much more useful because that is simpler and convenient. But somewhere I think eNACH or NACH has taken the driver's seat and it might continue doing that for rest of the years. But the growth for MF industry is going to be only on SIP.
Uh, Ganesh, one of the things that I recently read was that MFU completed 7 years. Congratulations. I think you just have
Thank you.
started your 8th year journey. So, if you were to think about the next 3 to 5 years and how MFU would want to, create a bigger wave than the wave that you've created in the first 7 years, what would be your key expectations from the payments standpoint? Uh, what would how would you think about the mix between lump sum and SIPs going forward? How would you think about the mix between payment service providers, innovation, and the points that you talked about in terms of service quality and ensuring that the ecosystem comes along with the thing? What would be some of your key expectations from the from a payments aggregator and the payments ecosystem in general?
See, I always keep telling, even when I was in KFIN or was in BSc or now in MFU, I think MF as a product or as an industry, the competition is no longer there. It's all about collaboration. So, end of the day, have the same investors base, we have the same scripts, okay, and we are our same distributors. Okay, so all the AMCs, be it's going to be 20 or 30, now we have around 40 AMCs. Everyone is eyeing for that AEM, that investor base, that distributor base, and that scripts basically. So we would my expectation is to collaborate more and bring on what we can able to bring. So the reason I'm saying is subscription is made well now today. We are good to enough to do that. And even as I think Jane told initially, if we can able to strike a good chord with the banking industry, which really helped MF industry, but there are still a lot of disparity between what they offer to other products versus MF. Probably the percentage is very less. If NPCA, RBA, or banking industry, along with payment aggregators, established players like you, can able to help us to streamline a lot of things, that will really really help. Uh, and again, I'm talking about not only subscription. I'm talking about the
Refund redemption as well.
refund, rejections, redemptions, and all this stuff. So as I told you initially, the debit card authentication. Okay, so that can be because everyone has debit card. Even the RuPay. I think there is some. There was an RBI circular saying that no RuPay card need to be authorized used for mutual fund and all. But unfortunately, all those banks who have RuPay uh, doesn't give us the underlying code, underlying bank account. Okay, if that can be done, so why not? Okay, so some of those things to be done. So I expect in the next 2 3 years, as digital is going to grow big time, to give a and payment experience is going to be one of the key component of an entire. So let's talk about say someone in Durgapur or Siliguri, very northeast. If I can able to onboard him quickly. I can able to do a transaction, but payment he need to authorize. Okay, so if he can able to authorize quickly and I get the payment, so the experience is so good. So they will say anyway, like people like BPFAs and lot of AMCs whose fund performance is very good today. So if you can able to recommend, one is the fund performance, second is your payment is done quickly because that's where your emotion lies, your money lies, whatever it is. So I would say next 2 3 years, people like you as a CAMSPay able to help us, like this webinar. We should also have more yeah, focused group with the um, significant stakeholders like people from NPCI, people from RTA, MFU, exchange platforms come together, probably form a committee to see like what we need to do, then give that recommendation to SEBI or RBI or NPCI. And I'm not saying it will happen, but at least there will be some. And we don't have 10, 15 items, Ravi. We have only some 3, 4 items, okay, or maximum 5 items. If we can able to drive that, I think that will be of great help for the industry. And then the vision of AMFI of 100 trillion will definitely happen. So that's where I think we should head towards it. Till now, I think payment has been grown on its own. Okay, we cannot really not nurtured it properly, but any focused nurturing, focused vision on that will able to help us much more. Is my view.
No, thanks for that, Ganesh. In fact, I should tell you that in just in the past few weeks, the amount of interactions that we have done along with NPCI, with AMFI, with some of the regulators is actually, if that is an indicator of what the future holds, then like you rightly said, making sure that the ecosystem is completely enabled, be it in, with, the public sector banks or with tier 2, 3, 4, 5 banks, and them providing the third party validation and so on and so forth. These are some of the things that, as a strategic partner to NPCI, we have been from CAMSPay talking and taking some of these things on behalf of the mutual fund industry, saying that these are key prerequisites for the mutual fund industry to adopt many of the NPCI products in a bigger way. So I'm very hopeful that in the
No, that's
coming.
where you will have a differentiation. Obviously you're an
Absolutely.
established player, and you also have your one of your entity which is CAMS, which is obviously the one of the key stakeholder. That's where if you can able to help and collaborate. I always say competition is no longer there. It's all about collaboration. I think that will be great for the industry.
Absolutely. So we are very, very committed to make sure that we are able to bring these diverse players and create an alignment of purpose and make sure that the end investors experience is what gets, whatever we do is in favor of the end investors experience. Ganesh, thank you so much for your time today. Jayant, thank you so much for your time today. I think we covered a number of topics. Both which are very core to the mutual fund industry and things that are very relevant to the payment industry as well. That is the what we try to bring about in our Payments Insider webinar series from CAMSPay. What can we do to make sure that we are able to be a better payment service provider to our clients? So thank you so much, Ganesh and Jayant, for your time and for such candid thoughts today. We look forward to using this platform to bring up many more points. I think quite a few points that you've brought up today are things that ought to be there. Some of them are work in progress. Some of them are new things that we need to look into as well. And from CAMSPay standpoint, as a representative of the payments industry, I can tell you that there's a lot of things going on in the payments industry, and hopefully we'll have more reasons to celebrate and create a more positive customer experience going forward. Thank you so much.
Thank you so much, Ravi. Thanks for having me here. Thanks, Jen, and best wishes, and we'll talk soon.